Gold is 32.27, down 61-ish. Actually was down about $85 on the lows. So we're off the lows.
Welcome to the Morning Markets and Metals with Vince Lanci, where each morning Vince brings you the financial and precious metals news to get you ready for your day. And now, here's Vince.
Good morning, I'm Vince Lanci. This is the Gold Fix Market Rundown. There is breaking news. China has stepped back. They actually sold 1 million ounces last night. Macro shorts are piling into gold. We're going to cover why, where, and how that happened after we go through a couple other things. Let's start with the markets. 10-year yields are 4.13, down 3. The dollar is 99.85, up 21. The S&P 500 is 56.23, up 27. The VIX is 24.11, down 57. Gold is 32.27, down 61-ish. Actually was down about $85 on the lows. So we're off the lows, if you want to say it that way. Silver is 32.37, down 18 cents, well off its lows. I'm liking what I see here very much. Copper is 460, up 6. Again, all that gold, silver, copper relationship, we're going to talk about that to give you a way to understand what's going on that you probably haven't heard in detail elsewhere. Okay, WTI 57.67, down 82 on the back of the Saudis saying, screw that, we're going to keep pumping anyway. Don't tell me there's no deal cut with the U.S. on this. Natural gas 326, up 1. Excuse me. Bitcoin 96,400, up 2,200. The new gold is taking over for the old gold right now. Palladium 945, up 3. Platinum 966, down 2. Gold, silver down a whopping 1.1. It was down only 30 basis points 20 minutes ago. Give you an idea of when the selling backs off on gold, the buying in silver comes in. It's just the more things change, right? Soybeans 1032, up 1 and change. Corn 469, up 3 and change. And wheat basically unchanged bid at 532. All right, there's the homepage. There's a story in the center we're going to cover. We just sent that out to people, to premium subscribers. Left-hand side, COMEX Death Watch, you know about that. And why the JP Morgan report is so important, even if it is the sign of a top, short term anyway. All right, discussion 1, gold dives on record Chinese holiday liquidations. That is true. Discussion 2, macro traders begin to short gold, cover silver. Don't get bullish silver, just know that this cycle is turning and the next cycle higher silver could actually lead. Let's hope that's soon. All right, so here's the stories yesterday. Breaking, we just told you about that. We're going to tell you about that a lot more. Founders AM, quick audio chart recap on some observations that we had. Gold physical buying versus backtest bears, which is what we discussed yesterday. We weren't sure who would win. Well, it looks like the bears have won today. U.S.-China chances of military conflict now eclipse reconciliation. We don't agree with the handicapping, but we like the analysis. That's basically an assessment that says there's chance of a hot war, big or skirmish, are now eclipsing the chance of pure reconciliation. The likely answer is in between, which is relocation. So manufacturing leaves China, right? We put some of our manufacturing in India, and China put some of it in Vietnam. And the whole thing just kind of like is a workaround for tariffs. And gold back tests argue for a pullback. That was 2 days ago, actually 4 days ago to founders and 2 days ago to premium. And finance 5209 final. My students have their final exam that's due on Sunday. There's the test without the answer in case any of you want to pit your brains against an MBA grad student. All right, analysis. China steps back, sells 1 million ounces overnight. Macro traders step in. Yesterday marked the first session in some time that China did not open its trading day aggressively buying gold. We speculated yesterday this could be a signal, an overture to the United States. Perhaps a gesture intended to soften the atmosphere for trade negotiations. This would be consistent with Beijing's broader strategic pattern. Overt displays of leverage such as naval drills near Taiwan, used as proxy for growing or needed political communication. We stand by that. We maintain that. The chart you're looking at there is a zero hedge chart. Easy come. That's the ETF buying going into gold. Easy go. So while we maintain that possibility remains valid, it's valid. A more proximate and operational driver is now apparent. Sometimes you got to get your head out of the clouds and pay attention to what's going on. Goldman's trading desk in Asia noted last night, East Coast time, or in the morning, Asia time, China liquidated what it bought last week ahead of Labor Day holiday. International Labor Day holiday is a 5-day holiday, resulting in total onshore positioning now 5% off the all-time highs. China's share of total open interest in the world remains on the highs at around 40%. That's part of a note that they sent, and we cover that note in the premium post that was sent out, which has some interesting charts that are not readily available in the WestJet, and thank you to Zero Hedge for that help there. China has begun selling gold both at the ETF and futures level. This activity picked up last night and directly tied to upcoming domestic holidays. This is not unprecedented behavior. Easy go marks that a similar chart. The red line there is them getting out of open interest. Them does not mean China proper. It means speculators. You may or may not remember over the years I've said that China is central authoritarian economic model. So they say what they're going to do, they disseminate it to their banks, and then the banks disseminate it to their funds. And it's kind of like what happens in the US, but they essentially admit to doing it. Not unlike how they work their currency. They say, our clients are doing this. Our clients are doing it. Well, their clients are them, essentially. So, and as we've noted over the years, let's go back to the script here. As we've noted over the years, large institutions routinely run gold versus silver trades for profit. Did I skip a page there? Oh, there it is. Sorry about that. If you're a macro trader and believe gold is stretched on the upside, one way to express that view is through intermetal spreads. This is the news about silver. Specifically, comparing gold to silver and copper allows you to isolate precious metal safe haven properties from the industrial economic drivers that underpin the other two. Now, that chart there is a nice chart we found yesterday, and it's similar to the ones that we used to create when we traded all three metals against each other. Now, you may not be able to see it on that chart, but you can see it if you open the post. But there is a dot in the upper left-hand quadrant. And on the y-axis, you're looking at gold really high relative to silver. Okay? And on, that's the y-axis, sorry. And on the x-axis, as you go lower on the x-axis, you're looking at silver, looking at copper looking really low relative to gold. So you've got gold versus silver here, and you've got gold versus copper there. And the higher it goes into that top left-hand corner, the more they hate silver. And that's it. And right now, we are so ridiculously high on silver. Where is that? There it is. Oh, no, there it is. There's my next part. And as we've noted over the years, large institutions routinely run gold versus silver trades for profit, often on different timeframes and for different macro reasons. However, over the last 2 years, the dominant force has been central bank buying of gold. This dynamic convinced most of the market's major participants that gold demand would structurally outpace silver. That view, our view, has largely been vindicated. But the good news is on the right. You see, as gold drops, silver will drop less because so many of these guys are long gold and short silver for a myriad reasons, like plethora of reasons, like a shit ton of reasons, excuse my French. And those reasons are being unwound. So some of them are selling gold and buying silver. Some of them are selling gold, waiting, and then buying silver. Some of them are buying silver and selling gold. And then there's people out there just selling silver. Guess who those people are? US CTAs, momentum guys who just sell stuff because it goes down. So we're setting up It's not going to happen tomorrow, but we're setting up for the next type of we're in the early stages of the next type of a short squeeze. The last really good one we had was in 22 when India was just buying silver while the funds were selling it. Now, India is already buying silver, as evidenced by the EFP, but now you have more selling by the funds. So the moral of the story of this little thing here is one, you have a holiday, and that holiday is making hot Chinese money puke. That's not new. It's been going on for over a decade, but it's just really, really big this time. China says, we don't want you buying so much gold, and they put the brakes on. The holiday comes up, the brakes get put on, and things start to happen. The question is, at what price will the dip be bought? Well, today it's being bought already. And I think you're looking at American banks and other dip buyers looking into buy it. So China demand, easy come, easy go, right? That's the speculative and fund demand, which while it operates speculatively, also operates with the permission and the wink of the government. So for some reason, the clamps are being brought down by the government. At the same time, leveraged funds are saying, I don't want to go home long gold over the weekend when, who knows what could happen. And I believe that there's an overture of conversation going on between the two. So there you have it. That's the market. That's what's going on. That's why it's happening. Will it continue happening? It could. It could. We have seasonality in gold still, and that seasonality is going to show CTAs selling silver and selling gold. And hopefully, if China just does nothing for a couple of weeks, you could see this market get depressed to give us good levels. All right, moving on. Yesterday, the Dow and S&P 500 ended higher, recovering from earlier declines after data showed the U.S. economy contracted in the first quarter for the first time in 3 years. Treasury yields were little changed. The dollar rallied against major currencies while gold prices fell. That ledge that I drew, it was cracked today, sadly. Oil prices slumped after Saudi Arabia signaled a boost in production. I highlighted that or bolded that because there's just no way that the U.S. is not talking to the Saudis saying, keep oil prices down. I'm going to work a deal with you on the back end. There's just no way, right? We have to make peace somehow with Russia, right? And that would be, part of that would be you can pump more oil and we'll work something out on the other stuff. Anyway, that's part of it, right? Canada's main stock index closed lower as a contraction in the domestic and U.S. economies intensified investor worries about the fallout from Trump tariff policies. And there are the markets. Market news, we're going to skip that today, but it's there. But we have full stories and recaps for the whole day ahead at the bottom. The data today already out. I'm running late. The data today was initial jobless claims. Let me take a quick look to see what that is so I can fill you. Okay, so jobless claims spiked, which is one macro reason for gold to be off the lows. One macro reason for stocks to be firm because of anticipation of the Fed, excuse me, possibly cutting grows bigger. But tomorrow is non-farm payroll, so that matters more. There's the data on deck. Let's do a final market check. I prepared a gold chart for you all. You may or may not remember my comment about trend lines. This was the speed. This is the speed faster, faster, faster. Okay, well, now we can start removing them, right? That's broken. This one, let's call it broken unless we get above it. That's broken for today. And now you look at a 50-day moving average converging with this line. I think that if the liquidations continue, if the holiday were a 20-day holiday instead of a 5-day holiday, you would see us at 3,100 in a heartbeat. And you would see that because a pause in China buying allows macro discretionary to pile in. I really think when you look at those three back tests, that post that I showed you before, Those three backtests are really compelling, and they give people that run funds a reason to something to hang their hat on. So remember that open interest was dropping on in COMEX as the market was rallying. Banks were covering shorts, and the smarter funds were selling. Well, those smarter funds that sold are now saying, "Well, maybe I should actually get short now." So we could see a reversal cycle from the investor market. It just argues to be long straddles now. It's not the end of a gold bull market. Central banks are going to go back to uh, you know buying treasuries and selling gold. It's not going to happen. Anyway, how about we look at a couple other markets? 50-day moving average. There's silver. Here we are. Silver is kind of like dead in the water when you think about it, compared to gold. So, I mean, look at the rally in silver off the lows, right? What did I tell you would happen? Well, could happen, not would happen. Gold is off the lows. Here, let's go to an hourly so you can see it a little bit better. Right? Gold is off the lows. We'll hide the moving chart, hide the chart for you. Here we go. Gold reacts. Gold reacts to the data, right? Okay. Silver reacts to the data. Why the bigger jump in silver? Well, okay, you had a bigger sell-off before, but silver is now above 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 hours of activity, right? Gold is above 1, 2, 3 hours of activity. So silver took 10 hours of losses back in 1 hour, right? Gold took 3 hours of losses back. That informs me, just give you a trader's mindset. That informs me that all those gold longs and silver shorts, they took the sell leg on their gold and they're hoping they can buy the dip in silver. And that's how faces get ripped off. So something happens good for silver or good for the economy, silver is going to rip compared to gold. That's for sure. And Bitcoin tells the story right now. I think people are taking their money and taking their profits in gold and once again trying their hand at Bitcoin. Anyway, I'm Vince. Have a great day.
Well, thanks for watching this morning's Markets and Metals with Vince Lanci. We sure appreciate you tuning in and starting your day with us here. Hope you enjoyed the show, and we'll see you again tomorrow. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.